The purpose of the income statement is to assess how profitable we were during a period of time. Did we make money or did we lose money in its simplest form? How profitable we were during a period of time. That's not going to change. My purpose is the same. However, we're going to take the format from Chapter 1, revenues minus expenses equals net income or net loss. We're going to stretch it out or expand it pretty significantly. We're going to include all the new accounts that we picked up in this chapter, and we're going to try to make things more useful to the users of our financial statements as a result. Now, the way I'm going to approach this is kind of looking at one section at a time. The first section is something we call net sales. Now, we talked about net amounts before. What's the opposite? A net amount is smaller, right? What's kind of the opposite of net? The gross. So we have net and we have gross. We need to figure net sales. What if I told you that my sales this month were $10,000, but customers brought back $1,000 of that amount to me? I sold 10, but they brought back $1,000 of that merchandise to me. What was my net sales? 9. You really just calculate. You took the gross of 10 and you subtracted the returns of 1 to get the net sales then of 9. Well, that is pretty much the way we're going to calculate net sales here. We're going to take my gross or total sales. I'm going to subtract the sales returns and allowances, and I also am going to subtract the sales discounts, and that will give me my net sales, the net amount of revenue I received for selling my product. So it's gross or total sales minus sales discounts minus sales returns and allowances will give me my net sales. From that, I'm going to subtract cost of goods sold. Cost of goods sold is an expense. The merchandise that I sold this period, how much did it cost me? That is cost of goods sold. What is the difference between net sales and cost of goods sold? Net sales says that the items I sold this period, how much did I get for them when I sold them? Cost of goods sold said those same items that I sold this period, how much did they cost me when I bought them? Which of those two numbers do you hope is bigger, net sales or cost of goods sold? I hope the net sales is going to be bigger than my cost of goods sold. Remember though, the merchandise when I buy it is not an expense to me. It is an asset called merchandise inventory. When does that inventory become an expense to me? When I sell it. When I sell it. Just like supplies were an asset to me when I bought them, they became an expense to me when I used them up. They become supplies expense, right? Inventory is an asset when I buy it. It becomes cost of goods sold, which is an expense when I sell it. The difference between my net sales and my cost of goods sold is called gross profit. So if I bought an item for $50 and I sold it for $75, my net sales would be $75. My cost of goods sold would be $50. I've made a profit then of $25 on that transaction. Gross profit is what I made by selling a product for more than what it cost me. Selling a product for more than what it cost me. Here's an example. This one's not in your handout, but let's just look at it. We have sales. We're going to subtract returns and allowances and discounts. That's a total of about $12,000. Subtract that from the sales, and I'm going to get my net sales in of $708. Subtract my cost of goods sold of $525, and I get a gross profit then of $182. What does that mean? The items that I sold this period cost me how much when I originally bought them? $525. Good. I turned around and sold them for a net amount of how much? $708. So I bought them for $525. I sold them for $708. I made a profit then of 1, 2, 3. Now we need to subtract all the normal expenses. Rent, salaries, utilities, insurance, all those good expenses that the business has. We're going to now call those operating expenses. We just called them expenses back in Chapter 1, but they really are operating expenses. We are going to divide them into two categories though. We're going to have selling expenses and we have administrative expenses. Selling expenses relate to selling the product. Delivering it to the customer, marketing it, really anything which relates to our store is going to be a selling expense. Administrative expenses are more general in nature. They relate to overall business functions such as accounting and personnel that don't tie directly into selling the product, but more of the overall operation of the business. We're going to have our gross profit. From that, we're going to subtract our operating expenses. And you might think that would give you net income, and it almost does. But instead it gives us a subtotal we're going to call income from operations. Income from operations is our income from normal, recurring, day-to-day doing business. It is your gross profit minus your operating expenses. Let's look at an example again. That same gross profit. Selling expenses. I want to show you a few key words. Sales salaries. I want you to look down here. We have office salaries. Office salaries are administrative. Sales salaries would be selling. Advertising expense. Well, advertising by its very nature relates to selling the product. Depreciation expense on the store equipment is going to be selling. Anything that ties into the store is going to make it a selling expense. Miscellaneous selling expenses. Those are all selling. Office is a key word to flag you to something that's going to be administrative. Office salary expense is going to be administrative. Rent on the office, depreciation on the office, insurance on the office, supplies for the office. Do you see some key words? Office being a good word to tell you that it's administrative. Store, a key word to tell you that it's going to be selling. We figure total expenses in each category, add them up. Total operating expenses, subtract from the gross profit, gives me income from operations. To finally get to net income, we have to pick up two more things, and those are my other items. We're going to add in other revenues. Other revenues are revenues that don't relate primarily to the business's activity of selling merchandise. Really just three items you could expect to see. One is interest income. Maybe I earn a little bit of interest. That doesn't relate to my primary activity of selling merchandise. Dividend income. Now, we have talked about dividends before. We've talked about paying dividends, didn't we? All right, dividends were a way we could give money back to our shareholders to give them a return on their investment. The assumption under dividend revenue is that I'm on the other side of that transaction. I own stock in another company, and that company pays me a dividend. That would be an other revenue. Or rental income. You know, let's suppose we have a retail business, but we also own a building down the street, and I'm renting it out. That would show up as an other revenue also, any income I receive from that. So interest income, dividend income, and rental income will all show as other revenues. Finally, we're going to deduct other expenses, and the ones you can be looking for here always will be interest expense. These are expenses that don't relate to the primary activity of the business. And again, interest expense is the one you expect to see. Finally, we're to the end of calculating net income. We're going to take income from operations, add the other revenues, subtract the other expenses, and finally, we're back to net income. An example, again, not on your handout. Notice my income from operations. I had two other revenues, one other expense, a difference of $19.60. Tell me this, I had more other revenues than I did other expenses. The difference between the two, therefore, we will add because that will make my net income go up. What if I had more other expenses than I did other revenues? Then we'd have to take the difference and subtract it. And finally, we're down to net income. Now, I've given you what I call, this is the skeleton version of the income statement. This is the, leaving out all the details, this is the bare bones skeleton version. It is net sales minus cost of goods sold is gross profit, minus operating expenses is income from operations, plus other revenues minus other expenses is net income. Now, I do have a silly sentence for you. Santa Claus puts earmuffs on Rudolph every night. I don't know if you need it or not. Most students kind of need a little bit of help with this one because it's kind of long. So you might want to consider that sentence. There still is a little bit more to the income statement. For example, I just showed net sales there, but on your income statement, we have to show how we calculate net sales. I show operating expenses there, but on your income statement, we have to show how do we calculate those operating expenses. So this is just kind of the boiled down version without all the details. We're going to do an example. Now the data is going to come from the same place where we just made our closing entries. And then I've given you a form there for the income statement. Now, it does have three columns for the numbers. Do you see that? You see the three columns for the numbers there? Are those debit and credit columns? No. If you try to make them into debit and credits, will it work well? No, it's really ugly. We have more than one column, so we can follow the basic first grade rule. If you're adding numbers together, put them one beneath the other with nothing in the middle. If you're subtracting numbers, put them one beneath the other with nothing in the middle. We just will organize our material so that that always holds true. That's all. No debits, no credits. Now, I've really made this a very fill-in-the-blank type income statement. All right, I've kind of given you the skeleton already for right now for our first one. So, the first chunk is to figure net sales. How do we figure net sales? We start with what? Sales, which is my revenue, good, and subtract what two things? Sales, returns, and allowances, and sales discounts. Now, you might want to look at the columns here. Again, I've got the 123 in the middle column for the number. 7 plus 2, I need to subtract them. That's a total of 9. I'm going to take the 9 away from the 123. It says I have a net sales in of 114. Net sales of 114. From that, we need to subtract my cost of merchandise sold. That gives me a gross profit then of 61. What do these numbers mean? The merchandise that I sold this period, how much did it cost me when I bought that merchandise? 53. I turned around and sold it for how much? 114. Therefore, I made a profit of 61 on those transactions. Net sales, what I got for it when I sold it. Cost of goods sold, what it cost me. Gross profits, what it made. From that, we need to subtract my operating expenses. We need to first divide them into selling and administrative expenses. So let's go back to our example with the closing entries. And I want us to look at each expense listed and decide, is it selling, is it administrative, or is it an other expense? Delivery expense, is it selling, administrative, or other? Selling, relates to selling the product, very good. Sales, salary expense, is it selling, administrative, or other? Selling, why is that? What was the key word in the account title? Sales. How about office salary expense, selling, administrative, or other? Administrative. What's the key word in that one? Office. Interest expense, is it selling, administrative, or other? Other. Now, depreciation in and of itself, we really don't know, but I'm telling you, this is depreciation on the Millennium Falcon, and the Millennium Falcon is our office. So depreciation on my office, would that be selling, administrative, or other? Administrative. Had I told you that the Millennium Falcon was my store, then it would have been selling. All right, let's go back to the income statement. Under selling expenses, and we had 2, we had delivery expense, and we had sales salaries for a total of 11. And under administrative, we have 2, we have office salaries and depreciation expense for a total of 9. 11 plus 9 says my total operating expenses are 20. Why did I need to put this 1 and 10 directly beneath each other? Because I'm going to add them together, right? Why did I put this 6 and 3 directly beneath each other? I needed to add them. Why did I need to move the 11 and 9 over here directly beneath each other? Because I needed to add them. Why did I need to stick the 20 over here directly beneath the 61? Because I'm going to have to subtract it. So that's the reason. We are just positioning things so that every time we're adding or subtracting numbers, they're one beneath the other with nothing in the middle. That's the whole reason for the column. So my gross profit was 61. My expenses are 20. I'm almost to net income, but not quite. Instead, we call this income from operations then of 41. Income from operations is my income from normal, recurring, day-to-day doing business. To get to net income, I just need to pick up my other items. I need to add in any other revenues. Do we have any revenues that would be considered other? We had interest income, good. And then we need to subtract any other expenses. Do we have any expenses that would be considered to be other? Interest expense, good. Other income is 12. Other expenses are 4. Difference between 12 and 4 is 8. We need to decide whether to add or subtract that 8. What do you think? Add. Why? Because the other revenues were bigger than the other expenses. Therefore, that is going to make my net income go up. Had we had more other expenses than we did other revenues, the difference would have been subtracted. Gives me a net income of 49. Have we seen that number 49 before? This data came from the closing entry problem. The third closing entry was for $49 because the third closing entry is always for the amount of my net income. This should equal the amount of my third closing entry. If it doesn't, something's wrong. We need to go find it. That is my multi-step income statement. We can still do a single-step income statement. That was Chapter 1, revenues minus expenses. For a merchandiser, we can still prepare a single-step income statement. Now, as we talk about a single-step income statement, we're going to do it in what's called condensed form. What does it mean if something is condensed? If something is condensed, it's smaller, it's shrunk down, isn't it? A condensed income statement is where we'll leave out all the details. We're just going to pick up some totals. We're going to leave out the details. So, for example, when we go to show revenues, we're just going to include in that net sales. Instead of showing all the calculations of net sales, we'll just show the amount of net sales and then include any other revenues we might have. When we go to list expenses, remember cost of goods sold is an expense. List it with all of our other expenses. Instead of showing the details, we're just going to show my total selling expenses, one number for the total, my total administrative expenses. Again, we're going to leave out the details here. It's a condensed, leaving out the detailed version. Let's look at this one example right here. This is the same data from the last one. Notice under revenues, I show net sales. I don't show how I got it, I just show net sales. And we add to that my other revenues to get total revenues. Under expenses, cost of goods sold is an expense. Don't forget that. We show just the totals of selling and admin expenses. Get total expenses, subtract that from the total revenues, and I get a net income. Net income is going to be the same whether you do it single step or multi-step. Either way, it's going to be the same. What's missing from there are the helpful subtotals. For example, I think gross profit is one of the most important figures on the income statement. What we made by selling something for more than what it cost us. Do we see gross profit on the single step income statement? No. Could we pull out our calculator and figure it if we had to? Yeah, we could take net sales and subtract my cost of goods sold. But it just is not readily apparent. Same thing for income from operations, doesn't show in the single step statement either. At first glance, the single step statement looks a whole lot easier. I'm going to convince you by the end it might be a little bit easier, but probably not much easier. But we're going to take the data from that multi-step example. So if you would actually pull out your multi-step income statement so you can be looking at it right now, and we're going to prepare it as a single-step income statement instead. So under revenues, what are we going to show for revenues? Net sales. Forget the details. We're just going to show net sales. 2 columns for numbers. This is going to be the inside of those 2 columns then. Do we have any other revenues that we should pick up also? My interest income, good. That's all the revenues I had, so I will calculate and show then my total revenue. Expenses. Tell me some expenses we had. What's the biggest expense usually for a merchandiser? Cost of merchandise sold. Good. And then my other 2 major categories of expenses are what? Selling and administrative. Good. Again, condensed version. I'm leaving out the details. I'm not showing how I calculated total selling expenses or how I calculated total admin expenses. I'm just putting the totals there. Anything else that we need to pick up with our expenses? Interest. Good. We also had interest expense. And if we add all those together, then we see that the total amount of my expenses is 77. I'm going to subtract that from my revenues. I get a net income of 49, which is exactly the same amount as the net income I calculated on the multi-step income statement. Single-step income statement looks a lot easier at first glance. Well, just some points to mention. We just showed net sales on the income statement, but did we still have to calculate net sales? We sure did. We just aren't showing it on there, right? Nobody would appreciate all of our hard work. How about selling expenses? Somewhere else, do we have to calculate total selling expenses? Yeah. How about total admin expenses? Do we have to calculate that somewhere else? Yeah. Nobody sees all that hard work right here. All right. Is it easier? Maybe a little bit. We don't show gross profit and we don't show income from operations, but other than that, it really is just the same. So perhaps it's not as much easier as it appears at first glance.